Hi, my name is Sally Gimmon, and I am the owner of the trustisyou.com and a podcast called Stop Paying Capital Gains Now with an exclamation mark. On September 12th, I'm going to do a major speech called Save Federal Taxes at 4 p.m. on Zoom. So I'm showing examples of my clients and what I have done with the Spendthrift Trust. Now, just to give you some idea, the Spendthrift Trust is legal, patented. It's in the IRS Tax Code 643B, like Bravo. It came over from England way back when King Henry VIII got in trouble for chopping off his wives' heads. He started a church, go figure. He went to go tax the lords and ladies. The lords and ladies went back to the Magna Carta. You can Google all this and said, no, 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 King Henry, you can't do this. This trust came over to the United States while we were still a colony. The law firm I work on behalf of has a trust that is turning 350 years old in 2023. This is legal, people. There's a textbook that trust attorneys study. It's called Scott and Asher on Trust, 5th edition. Only 3% of all attorneys are trust attorneys. So this is a very specialized trust. Most CPAs work in the 300, 400 level because that's where 90% of all tax returns are done. This is way up in the 643B tax code. Back in 1913, when the tax code was put into effect, the very rich families like the Rockefellers, the Carnegies, the DuPonts, and the Kennedys made sure they could keep saving taxes and making money. Good for them, because I know their secret and I'm going to teach it to you. Now, with this trust, I don't care what trust you get, there are 4 of them I'm going to talk about. With this trust, you're going to save federal taxes year after year, generation after generation. Who doesn't want to do that? Number 2, you're going to keep your information private. Unfortunately, so many people think the LLC, S Corp, or C Corp will keep their information private. I hate to tell you this, it's statutory law. Each state is a little bit different. And if I do a Freedom of Information Act, I can get all your information from either the Secretary of State or the Corporation Commission, depending on what your state does. And number 3, I can't stop you from being sued, but you're going to pay no judgments if you get sued. So this is going to save you thousands and thousands of dollars year after year, generation after generation. Now, there is the business trust. That's for 1099 income earners. If you make 1099 income, maybe you have a side hustle. Maybe you're an affiliate marketer. Maybe you're a business owner. Maybe you're a realtor. Maybe you sell cars. Maybe you're a salesman. You're going to save at least 70% year after year on your federal taxes. I can legally save 70%. My clients are saving between 90 to 95% every single year. That's a lot of money. That's the business trust 1099 income. The beneficial trust is what I'm going to talk about today. The beneficial trust is for investors. I don't care what kind of investor you are, real estate investor, crypto investor, passive investor, stock market investor, a day trader, a forex trader. Maybe you are into royalties. Maybe you're an author, a playwright, an actress, or you have NFTs or mineral rights. You're going to save capital gains, short-term and long-term. You're going to save interest income. You're going to save dividend income. You're going to save rental income and royalties year after year and generation after generation. So this is capital gains. This is from when I was living in Phoenix. I started the trust September 2000. I started the trust. In my real estate group, I bought a bank-owned note. It was a 6-unit apartment building in Norwich, Connecticut. You get to do due diligence for 4 weeks and then turn around and you can sell it because it's a bank-owned property. It's easily done. So while I was doing the due diligence, there's 6 apartments. Only 1 apartment was redone or up to modern standards. All 6 apartments were being rented out. So I let people know what was happening. I sold it to another investor in my real estate group. I bought it for $183,000. I sold it for a cool $200,000. It's going to be his first multifamily property that he had. I used the trust to do this. It was a double close because I had to close with the bank on one day and then close with the gentleman in my real estate group the next day. Because I did this with the Spendthrift Trust, I saved $4,003.31 in capital gains. Hence the title of my podcast, Stop Paying Capital Gains. I usually wholesale bank-owned properties. auction houses and other things. I don't want to be a landlord. I don't want those calls at 2 o'clock in the morning saying, hey, the toilet's backed up. So I know I leave money on the table, but my friend, we're still good friends. He still has his property. He has rehabbed all 6 apartments since we've done this back. We did this deal back in November of 2020. He has rehabbed all the apartments and is getting more rent on these apartments. Again, if I had kept this as a note, just to give you an idea, that would be interest income. It was bank-owned property. I don't know how the bank got it, but they can't. Banks can't hold properties. And in my real estate group, my mentor Jay Tannenbaum had this on a list, and I purchased it. It was a wonderful deal. I made quite a bit of good money on this. My friend who bought it as a real estate investor, he's making great money on it still today, still having it. And I'm not paying, I didn't pay short-term capital gains. By the way, my friend who bought this also has the Spendthrift Trust. He's not paying rental income. Short-term capital gains, interest income, rental income, dividend income is taxed between 10% to 37%, whatever your tax rate is. My personal tax rate, because of the money I was making as a Medicare broker and doing real estate, was 24%. That was high. So this is why I use the numbers as 24% on this thing. If you're into royalties, it's between 10% to 35%, 7 different layers. So if I can help you save 1099 income with a business trust, if I can help you save capital gains, short-term or long-term, interest income, dividend income, rental income, or royalties with the Spendthrift Trust, or if you're looking at a non-charitable trust and getting grants, there's a charitable trust, and then a special trust for seniors who are over 65, who are making too much money and don't want to pay IRMA. This coming October 2023, the IRS is going to be looking at tax returns from people on Medicare from 2021. If you have the business trust, the beneficial trust, the charitable trust, or the senior trust, you file a 1041 and will never, the IRS will not look at that. Again, my name is Sally Gimmon. My website, The Trust Is You. You can set an appointment, but I am doing a major speech on September 12th at 4 p.m. if you can come to that. If I can save, I'm not trying to crow, but if I can save almost $177,000 in short-term capital gains, you can too. Thank you for watching my videos. Have a wonderful Sunday. Bye-bye.